Hi folks, welcome back to the channel. This is Jason, Certified Financial Planner and host of Fighting Words Financial. Today, let's talk about Xpeng Motors. Now, I realize that this video now seems like it's a day late and a dollar short, and especially the dollar short part. Xpeng Motors was up 60% last week. I meant to get this video out before last week, but I got distracted by some personal issues and of course the election. Now, Xpeng is a bit of a black hole in terms of media coverage in the United States, but it's actually pretty well covered in European media, and there's actually a lot of good articles in other languages, and there seems to be quite a bit of interest in the Xpeng P7. And there's a lot of P7 reviews, but not a lot of company analysis, and that's some of what I'm going to do today. Now, it's really difficult to find in any one place some semblance of complete information on the technology, the brand management, and the financial condition, and where Xpeng is in the process of that most difficult part of becoming an automaker, which is, scaling production. As Elon Musk of Tesla has told us over and over and over, it's building the machines that build the machines is the hardest part. So this video is going to be a little bit longer than my normal videos. It's going to be a little nerdy and analytical from a higher level. I'm not really going to drill down into, minutia or specifics, but I am going to compare Xpeng to NIO to some degree. And if you watch the whole video, I think you're going to get the clear snapshot of where Xpeng is today and how they're poised to make it in the most competitive electric vehicle market on the planet. I think you're also going to see how the fortunes of several huge multinational corporations are intertwined based on how Xpeng is funded and sponsored. And I'm sure that I'm going to leave a lot of information out of this video, so please feel free to keep me and the rest of the investment community informed in the comments below. So I'm going to do something a little bit different today. I'm not going to make you guys wait all the way to the end of the video for my opinion. I'm going to let you know up front, and I'll just be thankful if you stick around and you see why I have these opinions. So here it goes. I think Xpeng is a good company and they have a real shot at success. And as investors, we have a real shot of achieving exponential returns. If I bottom line it for you, Xpeng makes a quality product that people want to buy in the markets that they're in right now. They have several huge advantages over their domestic competition when it comes to access to capital markets. And they're also far ahead of them in terms of building self-owned factories focused on intelligent manufacturing. This is important because when you own the factories, you own the margin gains from manufacturing improvements. And I think that as long as sales continue to grow at the pace that they have, they're going to see margins grow faster than any other new EV company, with the exception possibly of Tesla. I guess this is a great time to say please give me an early thumbs up and to please subscribe to my channel if you haven't done so yet. This is also a good time to disclose that I do have a modest position in Xpeng. It's only a couple hundred shares right now, but I'm probably going to be adding to it in the near future as I want to diversify my holdings in Chinese electric vehicle companies. All right, so let's dive into Xpeng. Xpeng is yet another company often called the Tesla of China. And if Xpeng is the Tesla of China, we should probably start by talking about the company frontman, and that gentleman is named He Xiaopeng. And I hope I'm pronouncing all these names correctly because I don't actually speak Chinese. But if there were ever two men in China vying for the title of the Elon Musk of China, one of those men would be billionaire He Xiaopeng. Xiaopeng was the co-founder of UCWeb, the Chinese mobile internet software and service provider, which first opened for business in 2004. UCWeb is how he made his first couple $1 billion. UCWeb was acquired by Alibaba Group in 2014 in what was at the time the largest M&A deal ever executed in the Chinese internet industry. Once again, I apologize if I massacre any of these names, but Xpeng was actually founded in 2014 by Henry Jia and He Tao after Tesla opened up its patents to public use and before He Xiaopeng came on board. Although Xiaopeng was one of the original backers along with Lei Jun, the founder of Xiaomi. Lei Jun is also a major backer of another major player in the electric vehicle market in China, and that is NIO. He does this through Shunwei Capital, of which he is one of the founders. Folks outside of China or who are new to investing might not be familiar with Xiaomi. It's one of the largest smartphone companies on the planet, either third or fourth largest at this point, with a valuation of around $50 billion. Xiaomi is also a collaboration partner with Xpeng in the development of intelligent hardware and the Internet of Things for cars. In 2017, Xiaopeng left Jack Ma's Alibaba Group and officially joined Xpeng Motors as one of the co-founders. He must have left Alibaba on really good terms because he was eventually able to secure a boatload of cash from Alibaba in a third round of funding. In fact, Xpeng has a lot of support from these really large multinational corporations, institutional investors, and local governments. Among the backers of Xpeng are the Alibaba Group, Xiaomi, the Qatar Sovereign Wealth Fund, the Abu Dhabi Sovereign Wealth Fund, Foxconn, IDG Capital, Hillhouse Capital, and Sequoia Capital of China, and they have a significant level of support from local governments as well. Before going public, Xpeng secured somewhere around $2.2 billion from the founders and from these institutional investors, as well as an additional $1.5 billion of funding when they finally had their IPO on August 27th of 2020. And since going public, they secured an additional $600 million investment from a development fund from the city government of Guangzhou that is earmarked to build out a new factory. Wait for it. Wait for it. Actually, this will be Xpeng's second self-built factory in the last 3 years, and I'll talk a little bit more about that later on in the video. The Guangzhou Economic and Technological Development Zone Fund is not just investing to pay for the building of a factory for Xpeng. They've also indicated a willingness to help in the procurement of capital and equipment and have committed to further investments in securities issued by Xpeng. That probably means the issue of convertible securities that have been popular with Tesla and NIO as a means of raising capital. These securities can be paid back in either cash or stock or a combination of both. Xpeng is certainly following the Tesla model for development, and this strategy has meant dilution for current shareholders of Tesla along the way, but it has also been one of the primary means by which Tesla was able to secure the funds they needed to build factories and to scale production. The development fund will also be helping Xpeng secure financing at rates of no more than 4%. Xpeng has the backing of government. They are on fairly solid financial footing, really, as well as they can be at this stage of company development. Now look, don't get too excited about this. Just having these business titans back a company's play is not a guarantee of success, and it really shouldn't even be considered an indication of one. Xpeng and NIO's Chinese rival Byton, a company that you may or may not have heard of, which counted heavyweight backers like Tencent, FEW Group, Foxconn, and a luxury car dealer called Harmony New Energy Auto, they recently furloughed about half of their 450 North American-based staff, citing coronavirus impact. And in June 2020, the company decided to suspend operations for a corporate reorganization for a planned 6-month period. Now it looks like they're going to emerge from this reorganization period under new ownership with their prospects and their reputation in question. Keep that in mind before going all in on any of these new Chinese electric vehicle stocks. Alright folks, let's talk about a few things that Xpeng is doing right and how they differ from their main rival NIO. And let's think about if they're really rivals at all. I'm not sure they really see themselves as such because their funding is so intertwined. It's actually pretty hard to find unbiased information on either company at this point, with pumpers and dumpers all vying for digital attention. I recently disclosed that I'm cutting some of my position in NIO, which of course, because this is the internet, was misinterpreted by many as me saying that there was something wrong with the company or that I was trashing it. Nothing could be further from the truth. I still hold thousands of shares and I think that the company has a great future, but the reaction to the video illustrates my point perfectly. People aren't behaving rationally when it comes to the prospects of these electric vehicle companies, and they're taking sides like it's a political party or a religious conviction. And guys, this attitude will burn you in the end. The electric vehicle enthusiasts that are interested in the Chinese electric vehicle markets, at least the ones in the United States, are already splitting into rival camps. Just like Android and Apple became new techno-religions for smartphones, where heresy is punished and faith is rewarded by the investment community, this is probably what's going to happen with NIO and Xpeng. Of course, me being me, this is probably exactly the wrong time to bring up to Apple zealots that between Samsung, Huawei, Xiaomi, Vivo, and Oppo, Android OS is now on over 70% of smartphones worldwide, and at best, Apple now has about 14% of global market share. Okay. Back to Xpeng. Xpeng can't really be described as merely electric vehicles, a lot like Tesla. They're built on a technology platform first, and there's a car wrapped around them. And from the beginning, they've been conceived from the ground up as intelligent cars with internet DNA. They're intended to seamlessly integrate advanced internet, artificial intelligence, and autonomous driving technologies. All of this was made possible by Tesla deciding to open source their patents under certain restrictions, all in the hopes of accelerating the adoption of electric vehicles and a sustainable energy future. Xpeng openly admits to being inspired by Tesla and openly admits that their company is based on patents that Tesla released under an open source agreement. There has been a lot of criticism that Xpeng is merely a parasitic clone of Tesla that offers very little as a positive source in the electric vehicle industry, and there's even accusations that their autopilot software is an outright ripoff of Tesla's design. I don't think this is completely true. I think their software is probably a little bit too close to Tesla's software, but I think the lawsuit filed by Tesla won't amount to very much. These things get settled out of court, money changes hands, wrists get slapped, nobody gets their day in court, and everyone walks away unhappy. No one likes this, but this is simply the way the world works. I think that one of the most important features of this company is their in-house R&D. Despite the fact that Xpeng is accused of copying Tesla's self-driving software stack, they're sinking a lot of money towards developing their own self-driving technologies. 43% of their 3,676 employees actually work in research and development related areas. Xpeng is reported as having the highest proportion of R&D spending and the highest proportion of R&D staff among Chinese EV companies, and has invested the most of any Chinese electric vehicle company in AI development and autonomous driving. Xpeng's R&D investment in 2019 amounted to $293 million. They're sinking a lot of money into research and development in an effort to be the cutting edge brand in terms of technology and appear to be aimed at a slightly younger, more tech savvy crowd than some of their rivals like NIO. Xpeng currently has just 2 vehicle models for sale, and they're looking to introduce a third in 2021, the G3 crossover SUV and the P7 sedan. The G3 has really sort of been ignored by the Western media in a lot of ways. It retails for between $21,800 and $29,100 depending on options. But under a separate battery as a service agreement, the base model vehicle can be purchased for around $18,000. Now let's be clear though, this is not NIO's battery as a service model. It doesn't work the same way, and these batteries really aren't swappable, not without taking them into the shop like NIO's cars are. So in a lot of ways, the battery as a service agreement that you sign with Xpeng is more an accounting trick to make sure that all of these vehicles qualify for the subsidies that the Chinese government is giving out for car purchases. It is a lot of value for the money, especially considering the available add-on software options and the infotainment system that includes things like the self-driving Xpilot hardware and software. It should also be noted that Xpeng's G3 sales have so far underperformed its Chinese rivals such as BYD, NIO, and Li Auto. With over 2 years in the market and 147 stores spreading across cities in China, the G3 still really hasn't delivered satisfying sales results. That all changed in April of this year, not the G3. Xpeng released the Model P7 sedan designed to compete directly with the Tesla Model 3. The base model starts at a very reasonable $33,400 and runs to around $50,900 depending on the options that you choose. Sales of this model initially got off to a rocky start, also especially in light of the fact that it was launched at the height of the pandemic in China. I guess this is a good time to bring up something interesting. I saw this in another YouTube video, and I also got it confirmed by one of my friends in China that this is how some of these Xpeng vehicles are sold, and let me tell you, this is an interesting sales technique. Apparently 2 guys will drive an Xpeng and a Tesla Model 3 to a random parking lot somewhere for a mini sales event. These are usually scheduled ahead of time. People hand out flyers, and then somebody gets on a bullhorn and starts pointing out the advantages that the Xpeng P7 has over the Tesla Model 3. They let people climb around inside of the cars and get to know the brand a little bit. I'm actually really curious to see if this technique produces any measurable results of any kind. It's interesting to say the least. Who knows, it could be working. In third quarter 2020, Xpeng reported that there was a 266% increase year over year in third quarter sales, and it delivered 8,578 EV units. Sales are growing, and from the messages I've gotten from Xpeng P7 owners, folks are happy with the car, and they tend to aggressively compare it against the Tesla Model 3. How much of that is derived from devotion and how much of that is derived from fact, I don't really know. The Xpeng P7 is reportedly a great vehicle that compares quite favorably to the features of the Tesla Model 3. There are a bunch of English language reviews from folks living in China and a number in Europe who have test driven the car or they own it, and they really do believe that it's a viable challenger for the crown in that class of sedan. The P7 has the longest advertised range among electric vehicles sold in China at 438 miles, according to the NADC. Now the NEDC probably should be called not even darn close because it's notoriously optimistic. Some folks suggest that you should knock about 30% off of that number and that would be a more realistic range number. So just like Tesla's vehicle lines, the P7 sedan is a technology platform with a car wrapped around it. For its XPilot system, its Innovation Level 3 automatic driving system, Xpeng opted to go with the high-performance, energy-efficient NVIDIA Drive AGX Xavier AI computing platform. You know, one of these days I'll get around to doing a video on NVIDIA and the truly sci-fi stuff they're up to these days. NVIDIA is another company that's really shaping the background of the sustainable energy and EV revolution. I'm actually not going to spend too much time talking about the cars themselves or their features. Yes, they are very impressive, and at the rate that sales are increasing, this suggests to me that there's a real level of interest in the car. No, I want to talk about something that's even more impressive. Xpeng has a particular focus on intelligent manufacturing, which I feel is one of their competitive advantages over all of the other companies in China right now that are reaching for a slice of that electric vehicle pie. Unlike some of their major competitors, they've sunk a lot of the capital that they've been able to raise into vertical integration and building out their factories. There are folks here who look at this company and see this as a mistake, but I don't. It's really difficult to get a car manufacturer off the ground anywhere in the world. In fact, look at it. From 1920 to 2020, there's basically only been one car manufacturer that has gotten off the ground, started producing vehicles, and is still around today, and that has actually scaled production somewhat, and that's Tesla. It actually might be easier to start a car manufacturer in China, though, because of some of the unique arrangements that they have. Obtaining a manufacturing license in China is very hard, and many startups have this option to partner with an established manufacturer that might have excess capacity in existing plants. As a result of the availability of these types of arrangements, because of the massive manufacturing capacity of China, China certainly has more domestic brands of vehicles than any other country in the world. At last count, they have more than 130 different car brands and over 950 different models of automobiles that are available to the Chinese consumer. Both NIO and Xpeng started out manufacturing their vehicles with strategic partnerships. NIO formed a partnership with the state-owned JAC Motors, and today all three of their production models, and probably soon to be 4 models, are actually produced in JAC factories. NIO had plans to build a factory of their own, but was forced to abandon those plans due to all their financial troubles in 2019. Xpeng's first production model, the G3 crossover SUV, is produced at legacy automaker Hayama Automobile under a partnership agreement. This production line reportedly has a manufacturing capacity of about 150,000 units per year, but so far vehicle sales are not pushing that capacity to its limits by any means. In fact, I think they barely sold 50,000 of those vehicles in the last 3 years. In June of 2020, Xpeng Motors, though, took a giant leap forward with the opening of their own state-of-the-art manufacturing facility in Xiaoqing, Guangdong province. The Xiaoqing Xpeng Motors Intelligent Industrial Park is a 3,000-acre plot in Guangdong province and was built out over a period of 15 months. This move really solidifies Xpeng as a serious player in the electric vehicle industry in China, and they're currently the only electric vehicle company to manufacture under both the partnership model and to have a factory of their own. This self-designed and self-built manufacturing plant is unlike the state-owned JAC factory where NIO makes its vehicles and is highly automated. They employ 264 intelligent industrial robots, and Xpeng says the factory is operated by only an experienced team of 600 professional engineers. The Xiaoqing factory and its 600 engineers actually has an annual production capacity of around 100,000 units and is already producing its newly released electric sedan, the Model P7. Xpeng is absolutely kicking NIO's tail for the moment in terms of scaling manufacturing capabilities. And the butt kicking doesn't end there. If you remember earlier in the video, I mentioned that Xpeng Motors raised another $600 million from the Guangzhou Economic and Technological Development Zone Fund. They've already laid out the foundations for the Chinese electric vehicle startup's second factory build in only 3 years. This new Xpeng factory will be fully financed by the government fund, according to Xpeng. The government will lease the finished plant to Xpeng for an initial period of 7 years, and then after that lease expires, Xpeng is able to acquire the plant at cost. The proposed Guangzhou plant is expected to start production in December of 2022 and is supposed to have an additional annual capacity far greater than the Zhaoqing factory, which can produce about 100,000 units per year. They are pretty far ahead of their rival NIO in this respect. It's just a fact that NIO gets a lot more press coverage than Xpeng does for whatever reason. But a lot is happening for Xpeng lately, and they're still in the early startup stage. The fact that they already have 2 of their own factories at this point is actually pretty amazing when you think about it and you consider that NIO doesn't even have one yet. NIO, though, has sold more cars than Xpeng at this point, and that could change, though, at any moment. There's a large market out there. It's going to be a giant pie. There could be a lot of companies that end up with a pretty big slice of that pie. The next gigantic advantage that Xpeng has over NIO really comes down to one thing. They got lucky, and this has to do with the number of outstanding shares that each company has floating out there. Xpeng just has far less in the way of shareholder dilution in their history, and that might make it a lot easier for them to finance future expansion. Xpeng did not run into the same financial issues that NIO did in 2019. There are a lot of reasons behind that, but I'm going to say a lot of it was just bad timing for NIO. They really didn't do anything that I could see was blatantly wrong. They just got caught out at the wrong time. Xpeng has not diluted their stock as much as NIO has with secondary offerings and convertible bonds. And unlike NIO, they weren't forced to sign a somewhat bad short-term convertible debt deal to stave off bankruptcy, which resulted in even more shareholder dilution. Let me put this in numbers for you. NIO has about 1.36 billion shares outstanding. Xpeng has 790 million shares. Now, I don't want you to think there's any sort of one-to-one equivalence here when it comes to the level of dilution with each company. I don't want you to think that there is. But at some point, NIO's going to have to go back to capital markets to raise money to build factories in order to scale production faster than the competitors, and most importantly, to have control over their manufacturing process, which is going to result in more dilution over time. NIO already has 300 million more outstanding shares than Tesla does, and at some point, investors are going to wake up and to start to notice that there are other less diluted growth opportunities out there. Xpeng could well be that opportunity. They too will have to go back to capital markets again and again to build more factories as their company grows. And as all of these companies are competing for a limited pool of investor money for development, it would seem that a company with good products, one that has a partnership production factory, has already built 2 factories on its own, and has the ability to produce 400,000 units a year, might seem like a better bet than a company with no factories of its own that is twice as diluted. Look, folks, I'm long on both stocks because I think that they both have a shot at success based on the available evidence. There's always the intangible factors like brand value that a company can have that I fully admit to having a hard time wrapping my brain around. And in the long run, those intangible factors could play a huge role in the success of either automaker. But based on the information we have right now, I couldn't really choose between NIO and Xpeng if I had to. I wouldn't choose just one, so I'm not going to. I am going to be increasing my stake in Xpeng over time. Now, this isn't a recommendation for you to go out and buy, sell, or hold any security. You have to do your own research and come to your own conclusions. Anyway, folks, these are just my thoughts. Feel free to tell me how wrong I am in the comments below. Thank you very much, and I'll see you next time.